The U.S. economy is one of the largest and most influential in the world, but recent years have seen a number of signs that suggest it is in a state of decline. Here are some of the most shocking indicators that the U.S. economy is facing a devastating future. Rising inequality. Inequality in the U.S. has been on the rise for decades, but the gap between the rich and the poor has accelerated in recent years. According to the Pew Research Center, the wealth of the top 1% of households increased by nearly 40% between 1989 and 2016, while the wealth of the bottom 90% increased by just 16%. This growing divide is a major concern, as it indicates that the economic benefits of growth are not being shared equally across society. Decline in manufacturing. The decline of manufacturing in the U.S. is a major contributor to the country's economic problems. Over the past decade, the U.S. has lost 5 million manufacturing jobs, and many of these jobs are unlikely to return. This trend is damaging not just because of the loss of jobs, but also because it indicates that the U.S. is losing its competitiveness in the global market. Stagnant wages. Despite the overall growth of the U.S. economy, many workers are not seeing the benefits of this growth in the form of higher wages. In fact, real wages for many workers have remained stagnant for decades. According to the National Bureau of Economic Research, the median hourly wage for U.S. workers in 2020 was just $22.55, only slightly higher than it was in 1979. High levels of debt. The U.S. is currently facing a debt crisis, with both the government and households carrying record levels of debt. The national debt has surpassed $28 trillion, and the Federal Reserve reports that household debt has risen to $14.3 trillion. This high level of debt is a major concern, as it could lead to a financial crisis in the future. Slow economic growth. Despite the current economic expansion, growth in the U.S. has been slow and uneven. The U.S. economy is currently growing at a rate of just 2 to 3% per year, which is lower than the average growth rate of 4 to 5% in the decades after World War II. This slow growth is a sign that the U.S. economy is not as robust as it once was, and that it may not be able to sustain long-term growth in the future. Aging population. The U.S. population is aging, and this demographic shift is having a major impact on the economy. The aging of the baby boomers means that there will be fewer workers to support the growing number of retirees, and this could lead to a decline in economic growth. Furthermore, the costs of healthcare and pensions for retirees will put a strain on the economy, as these costs are likely to rise in the future. Rising healthcare costs. Healthcare costs in the U.S. are skyrocketing, and this is having a major impact on the economy. According to the Centers for Medicare and Medicaid Services, healthcare spending in the U.S. reached $3.7 trillion in 2019, and this figure is expected to grow in the coming years. The high cost of healthcare is a major concern, as it is a major driver of inflation and a major burden on the economy. Decline in entrepreneurship. The number of new businesses being created in the U.S. has been declining in recent years, which is a major concern for the future of the economy. According to the Kaufman Index of Entrepreneurial Activity, the rate of new business creation in the U.S. has fallen from an average of 330 per 100,000 adults in the 1980s to just 130 per 100,000 adults in the 2010s. Another factor contributing to the devastating state of the U.S. economy is the rise in national debt. According to the Treasury Department, the national debt currently stands at over $31 trillion. This debt is increasing at an alarming rate, and there is no sign of it slowing down. The U.S. government has been relying on borrowing to fund its expenses, which is leading to an increase in the national debt. This has a negative impact on the economy because it decreases the ability of the government to invest in infrastructure, education, and other important initiatives that can drive economic growth. Additionally, the U.S. economy is also struggling with high levels of income inequality. A recent report from Oxfam found that the top 1% of Americans hold nearly as much wealth as the bottom 90%. This disparity is growing and has serious consequences for the economy. The lack of equal access to wealth and opportunity is a major barrier to economic growth and stability. It creates a situation in which a small group of people control the majority of the wealth and resources, leaving a large portion of the population struggling to get by. The housing market is also showing signs of distress, with rising mortgage rates and declining home values. This is causing a slowdown in the real estate market, which has far-reaching impacts on the economy as a whole. The housing market is a significant driver of economic growth, and a downturn in this sector can lead to a slowdown in consumer spending and investment. Another key indicator of the devastating state of the U.S. economy is the high rate of unemployment. Currently, the unemployment rate stands at around 6%, which is much higher than pre-pandemic levels. This high rate of unemployment is a result of the pandemic and its impact on the economy. But it is also due to structural issues within the economy. Many workers have lost their jobs permanently and are unable to find new employment, leading to a cycle of poverty and economic insecurity. Despite the current state of the U.S. economy, it is important to remember that it is not permanent and can change with the right actions and strategies. There are many reasons to remain optimistic and motivated in the face of economic challenges. For one, the U.S. has a long history of resilience and the ability to bounce back from tough times. Additionally, new technologies and industries are constantly emerging, bringing with them new opportunities for growth and prosperity. Moreover, individuals can play a significant role in improving their own financial situation by making smart choices and taking advantage of available resources. This can range from continuing education and skill building to seeking out new investment opportunities or starting a small business. Finally, it is important to recognize that the economy is not just a numbers game, but also a reflection of the collective actions and attitudes of society. By working together to support each other, promote positive changes, and stay motivated, we can help bring about a brighter future for all. Remember, tough times do not last, but tough people do. Keep the faith and stay motivated. The future is bright, and the opportunities are endless.